Welcome back to the Malaysia Money Matters show. It's the 18th of December 25.
Good to be here. Today we're doing a really crucial deep dive.
What's our mission?
We're looking at the biggest corporate moves and, the political shifts of the day. And there's this really interesting theme emerging.
Which is?
It's how Malaysian giants are being pushed to expand overseas pretty aggressively, while back home, the government is grappling with restructuring its fundamental reliance on oil money.
Okay, that's a great frame. Let's start with Gamuda. They've just secured a huge construction contract in Australia.
A massive one, nearly RM2.7 billion, and it's a joint venture with Samsung C&T for the Marinus link Undersea cable project.
So Gamuda shares what, about half of that?
A little under, RM1.34 billion. But what's really fascinating here is that this isn't just, a big number. It's a strategic pillar for them.
How so?
Well, they're using this project, which is in renewables, so it's high margin, to really anchor their goal of doubling engineering revenue and net profit by FY 2028.
So that push into Australia is a hedge.
Exactly. It's a critical hedge against any volatility in domestic infrastructure spending.
Got it. Now, speaking of sharp results, let's talk about Top Glove. A dramatic surge in net profit.
Dramatic is the word. I mean, a sevenfold increase in the last quarter.
Wow.
Yeah, it hit RM 38.58 million, up from just over 5 million previously. It's a really significant recovery.
And this is driven by what? Inventory replenishment?
That's the main driver. And the impact is, physical. Top Glove is now reactivating 4 factories that were previously idle.
And that adds capacity.
A lot of it. About 6 billion pieces to their annual capacity. It signals that management believes this isn't just a blip. They see a structural return to healthy demand.
Okay, from recovery to a shakeup. Y&H Property saw a pretty swift leadership change after their AGM.
It was very swift. The son of the largest shareholder was actually voted out by shareholders.
And then what happened?
The follow-up tells you everything. Immediately, 2 nephews were appointed to top roles. Yu Kai Leun is the new group managing director.
So a move to tighten things up.
Precisely. It's being framed as tightening execution discipline, increasing accountability. It's a clear signal that shareholders demanded a refreshed approach.
Right. And Scientex is also looking strong. An 11% rise in their first quarter net profit.
Up to RM 142.9 million, mostly from just very efficient cost management. But here's the really interesting part of their story.
Go on.
Scientex is now actively looking beyond Malaysia for acquisitions.
Where are they looking?
All over. Southeast Asia, East Asia, even the U.S. They're finding that their domestic focus, on affordable housing, it just doesn't offer the kind of growth trajectory they need anymore.
So they're being forced to look internationally.
They are. Now, finally, on the corporate front, a critical ownership change for Vantris Energy.
This is the company formerly known as Sapura Energy, right?
That's the one. RHB Bank has sold its stake. They're no longer a major shareholder.
And who bought it?
Well, the shares were transferred directly to Maybank Group, which now holds a 19.36% stake. And this is a key move in their ongoing restructuring plan.
The one to get them out of financial distress.
Exactly. The goal is to slash their borrowings, which were monumental, from RM 10.8 billion down to RM 5.6 billion. It's a necessary step to exit that Practice Note 17 status.
Okay, let's shift to Putrajaya. Prime Minister Anwar Ibrahim talked about the recent cabinet reshuffle.
He did, framing it as a necessary leadership regeneration.
Well,
he pointed to the emphasis on younger ministers, in their 30s and 40s.
but there was a more crucial point he made about the economy.
Much more crucial. He called for Malaysia to drastically, and I mean drastically, reduce its over-reliance on Petronas dividends.
That's a huge statement.
It is, because while RM 32 billion is committed for 2025, that number is expected to drop to just RM 20 billion in 2026.
That's a RM12 billion gap.
A massive gap. It puts immense pressure on the government to find new economic drivers, and fast, because global oil price volatility can't be masked anymore.
Sticking with governance, the Immigration Amendment Bill has passed.
Yes. And this mandates that operators of sea vessels, aircraft, and trains have to submit passenger name records and advance passenger info.
So, stronger border control.
Fundamentally stronger. And it's being integrated with technology. We're talking about border control officers wearing body cameras and, importantly, AI-equipped CCTV at the counters.
To detect suspicious behavior.
Right. And it should dramatically change the efficiency of the whole process.
Meanwhile, the Football Association of Malaysia, AFAM, is facing more scrutiny.
They are. New FIFA sanctions for fielding ineligible players. A draw and 2 wins have been overturned into 3-0 losses, plus a CHF 10,000 fine.
And this isn't the first time?
Not at all. It just adds to previous sanctions over falsified documents. It really underscores a persistent compliance problem within FAM's structure that needs urgent reform.
We're seeing these fascinating global contrasts right now between sectors.
We really are. Look at China's tech scene. Chipmaker Medix Integrated Circuits had a colossal debut.
Oh.
It surged 693% in its Shanghai IPO. That is just pure AI mania driving valuations through the roof.
And you contrast that with what's happening in the U.S. auto sector.
It's night and day. Ford just announced it's canceling several electric models and taking a massive U.S. $19.5 billion write-down.
Nearly $20 billion.
Gone. It just illustrates how fast sentiment can shift when automakers struggle with uneven global EV demand and, wavering U.S. policy support. Reality is hitting hard.
So let's bring it all together. What does this all mean for you, the listener?
I think we're seeing this common urgent theme. It connects the domestic need for financial restructuring. You see it with Vantris. You see it with the government's Petronas problem.
With the absolute necessity for competitive global expansion by giants like Gamuda and Scientex.
Exactly. The pressure from global volatility is forcing financial discipline everywhere. Whether it's cutting debt to survive or diversifying the national revenue base, the real engine for stability right now is this push for profitable, accountable execution.
At home and far beyond Malaysian shores.
That's it for today's deep dive. If you want to stay ahead of the curve and get this critical analysis every day, make sure you subscribe to the Malaysia Money Matters podcast.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.